Welcome to another episode of Heartland Market Talk on the open range. Well, today's headlines: gold to the upside, getting back to all-time highs as last Friday when the Congress had decided to punt and put the football down the yard again for the fourth time, as we continue to have over gluttonous spending that started during COVID. Well, it started well before then, but it really magnified during COVID. Gluttonous spending, which was maintained through continuing resolutions in 2021, again in 2022, further into 2023, and now we continue to have these resolutions pushing it forward, and they always tell us that, well, just maybe we'll kind of cut spending by a fraction. So the currencies, as far as the dollar is concerned, aren't moving much. It's the gold and Bitcoin that are pressing to the upside on this news. Now, Bitcoin today bolting to new all-time highs just above $69,000 before dropping well over 5% into the latter part of the session. It was just too easy to see such strong gains that re-challenged a prior high. The Bitcoin traders, they are basically very tech savvy. They watch charts. They knew there was a resistance zone target there. Why not take some profits after making such substantial runs since just last September? We're well up over 100% in that short period of time. So when it comes to Bitcoin, many wonder what it is. Now, as this picture depicts, you've seen this many times, Bitcoin is not actually something physical. It's not a fungible currency. It's not something that you can hold. It's actually just digitized. It's in your computer. It's on the internet. And the currency that it is also where many central banks are trying to get to as well. They're trying to go to digitizing currencies the same way. But with that said, the Bitcoin is very similar to other currencies today, as nobody really backs their currencies by gold. They're backed by the full faith and credit of the spending governments. That is, by decree, they are a fiat currency. Fiat in the dictionary is defined as by decree, while Bitcoin is backed by nothing either other than the full faith and belief of the public. By decree, the public believes that Bitcoin is a viable currency, and so as long as it's continued to trade and over many opportunities to regulate it, it still is become the currency of choice as far as digitizing currencies are. And so today, that run to 69,000 is now the fourth time it's went on to new all-time highs and then retreated. So don't be surprised to see buying show up again, but from what lever? We'll find out on a level. Also, oil today retreating. Last week we talked about how it was stalling just under the $80 value, while on Friday it popped to just above $80 on the talk that OPEC will extend its oil cuts currently that are about 2 million barrels a day that were set to end here in March. They're going to continue them through June. Well, that gave support just for a day, but it was considered old news. The problem is the Chinese economy remains a dog, as they are the largest user of commodities. And as far as oil is concerned, they're not getting heavily useful for oil just yet. Now let's go on to our Heartland Insights. So as we look at the spot daily gold chart, here was gold roughing right back up to where we were early December when we had that overnight Sunday night spike to 2,150, then a quick abrupt sell-off within just several days. Well, today we tagged it and came off a little bit on the close, but I want you to note we've been always highlighting this spot monthly chart, talking about a break above 2,080 that will say something more significant is at hand. Now keep in mind, this is a monthly chart. So until we close the month out, really, this bar does not settle. So we could literally sell off by the end of the month and it'd be called a false breakout. We're just noting we are above critical resistance, and the longer we hold above 2,080 as we progress through March implies something much larger to the upside is building. As we do a measured move, we usually go the sideways range that something's been doing, and we've been doing this now for years. Going back to 2020, we've created this trading range of $400. This implies we should go $400 above the breakout, or something closer to 2,450 to 2,500 is what this somewhat implies. Now, silver, we call this the poor man's gold. And there's a reason we call it the poor man's gold, because people like to buy it thinking it's a cheap way of getting into gold. But look at how I just showed you the gold chart. But silver, nowhere near the highs made this past year, nor the year prior. And if we took a look at a monthly chart, this high of $50 was hit back in 2011, and it hit $50 back in the year 1980 during the Hunt short squeeze. And so here we are, silver, from the year 1980 to the year 2011, it tags $50, and we're sitting here at $23. This is why we call silver the poor man's gold. It'll literally leave you poor while you're trying to buy it as gold. So just keep this in mind. Not that you can't make money on silver, but never forget it is a commodity. It is not a currency. Now, moving forward on Bitcoin, our move today was been quite stellar. If you look at where it was in September, we were at $26,000. So when she hit 69,000 today, there was a lot of prosperity to take advantage of and profit into. But on the weekly charts, it also tagged with a high we made on November 30th of 2021. And so now you can see here dynamics, about 3 hits in this range. Wouldn't be a surprise, as you can see Bitcoin, she'll drop off $10,000 to $15,000 and think nothing of it and come back up, especially on these moves here, $10,000 breaks. So again, I wouldn't be surprised if we saw something back in the 50,000 range before we see another push higher. But the wheels are in motion. Bitcoin is on the buy because we have a government that just doesn't want to behave itself on spending. And you wonder why your grocery bill is so expensive. That's because they have debased the buying power of your currency. Crude oil, well, stalling out here today, as we can see over 2 days in a row, stalled out after bursting through the December and November and December highs, which were seen last Friday. We're stalling out. Wouldn't be surprised maybe crude oil because of the China story and the stock market down well over 400 points today starts to become concerning, can get the crude oil market to pull back probably that $76 range, which is trend line support as we continue our slow advance from winter into summer when energy usage for the northern hemisphere picks up. Now for today's question of the day. We have a viewer asking, what is short selling? Well, before we can answer what is short selling, we have to explain terminology, like there is long or short. You go long the market, you go short the market. Well, where did this terminology come from? Well, the easiest way to explain it is to bring in Mr. Ruler. And so to explain, if you're going to go long the market, you're going to buy low and you want it to get longer in price, and that's how you make money, going long. So if you're going to short sell the market, you want to sell at a high price and you want the price to shorten. Thus, you're going to go short to make money to the downside. So that is your explanation of short selling. You go short to make money at a lower price to buy it back, just like people go long to see the price go up and get out at a higher price. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well. Thanks for joining us during this episode of Heartland Market Talk on the Open Range.